Hey everybody, this is Jose. We are about to get started. This is a sound check. Please go ahead and type a quick message on the chat box so I know you hear me and we are ready to get started. This is the same routine as every day. So again, a message is highly appreciated so I know I am not alone if you wish. So I'm going to turn on my video stream as well. How are you everyone? Christian, this is great. Thank you for confirming. Very good. We are about to start. Here we go. We are live, everybody. Welcome to the session, everyone. Today is June 10, 2021. This is Options with Options. So we're going to be looking at the options markets, as the name suggests. Looking at understanding the market conditions, as always. From there, build the appropriate option strategies to take advantage of such market conditions, always with risk management in mind, and discipline, management of emotions, and a job well done, if you wish. That's the philosophy, and you guys feel free to ask questions, interact, and work with me in that market adventure. Before we get started, on the upper left we have the disclaimers. Please read it carefully. How are you, Maka? Read it carefully. This is important information. I'm counting on you to read it fully because it is indeed important. Okay, so please do not skip it. It's a short couple of paragraphs, so read it completely, please. From there, just wanted to talk about the agenda. We just said hello to everybody. How are you, Siderman? It's good to see you all. And wanted to remind you as well that we are simulcasting. That means that depending on where you are at in the world, as well as are you using Facebook, YouTube, our private room in our website, tradewithufos.com/live. So depending on all of these, video lags would be different. So keep that in mind when it comes to what you see on the screen. Because I am going to be using real-time market data, but with the video lag, it may look a little delayed on your side. So just keep that in mind, as well as when it comes to interacting on the chat box. Let's be on top of that, everyone. So when we ask questions or we need answers, we are not waiting for too long until that happens. Okay, so that way we have a smooth communication and we basically team up. Okay, and we work as a team in that market analysis and planning those trades. Okay. The plan for today, we're going to be understanding the market environment, as always, then review the trades. We'll do very little review because we did a lot of review yesterday. And from there, we're gonna get into finding new opportunities. And remember that for the ones of you attending the sessions in the public streams, such as YouTube, the sessions are going to be limited in time, where for the ones of you attending the sessions in the private room, the sessions are going to be full duration. Yesterday, we did full duration everywhere, just because the nature of the session led to be like that, but normally it's not the case. Okay, guys? So normally you should expect about 30 minutes if you are in the public streams. You should expect a full hour if you are in the private room. With all of this said, let's look at the markets. We are now looking at the S&P. The S&P that keeps moving higher. Again, we talked about this yesterday, so I'm going to have a little bit of a repeat of what I said yesterday. We are dealing with 14 out of 9. So this market is more likely going to turn and start moving to the downside. If it does, it's likely going to be about 3 days going down and then resume what it was doing before. Having said that, while that's what statistics suggest, notice the massive collection of UFOs that just keep building up on top of each other. So obviously that normally is going to be a tough one for the market to progress to the downside efficiently. So we may see something like that with only one or two of the red dots and then back to blue. So we'll see what in the end the market will do. But certainly being an aggressive buyer now, it's too late because the market has already moved a lot and is not likely to continue moving higher for much more, even though today it's teasing again, making all-time highs. Okay, so let's see what's going to happen. When looking at the VIX, you can see, before the market opened, the VIX was high actually. After the market opened, the VIX was low. So the market reached, I think it was at some point intraday, the market reached 0.6% or something like that. I'm talking about the S&P. And at that time, the VIX went down more or less to here. The bottom here is like 16.3, something like that. Okay, right now it's trading at 16.85. So yeah, so and no green UFOs, it's all red UFOs. So the VIX is likely going to continue falling. That's what this would suggest. Okay, so we're gonna have to observe and see. Okay, when it comes to trades that we have running, so team is one of the trades that we have running. Let me load Option Station Pro. Yeah, and I noticed today, and I'm not sure about the reason because my internet is working full speed, but TradeStation charts are taking a little bit longer than normal to load on my end, so I'm not sure why that is. But anyway, let me go ahead and change the symbol to be team. Okay. Cool. So it's loading. Here we go. So with team, so we talked about it yesterday. We are right there. In the middle of the range. We already talked about this yesterday. It's all using 18th of June. If I show you this trade on Thinkorswim, you will see team here showing $192.5 of profit. And yeah, everything looking good. Those options, losing time decay and losing value, losing extrinsic value, thanks to time decay. That was not a right way to phrase it. And therefore, everything is working according to plan. Stats suggest that stock to move all the way to 248 and 223. So 248 and 223. So 48 is about here, 23 is about here. Okay, so indeed, it's looking like we will end up in the purple area from now until next Friday. Not tomorrow, but the Friday after, which is June 18. Okay, so nothing to be added when it comes to comments. We already talked about this yesterday. When it comes to MasterCard, so when looking at MasterCard here, again, it's another iron condor, right? Also showing $82 of profit per contract. So we have that stock trading in the purple area. If I was to look at the statistics for MasterCard, it's 375 and 351. So 375 is here. 351 is here. Something like that. So in other words, it is looking like, we will end up as well in the purple area for that trade. Okay, so all looking good at this moment in time for those two iron condors. Moving to PayPal, which is the next one in line. So I'm moving to PayPal. Right here, click on PayPal to load the chart. So we can see this particular stock went a bit higher. Okay, yesterday was trading at 264, today is 266. So it's just going a little higher. But again, when looking at the options, okay, so we are in that area where we are netting $45.50 of profit at this moment in time. If you look at TOS, it shows minus 181, but remember, this is because we have already collected prior profits before, which are already settled in the account. So in that sense, when you add it all together, that's when you have this net P&L of 45.5. So at the moment we are profitable. We have positive theta. We are making $10 a day on time decay. That's good. The only thing is that the crossover line is here at 268. So if that stock keeps going higher, we are going to start falling into negative territory when it comes to net P&L. That's not very good. But again, it's not that problematic either because remember, we are expecting and waiting for a jump in volatility to take place, and then next thing you know, then the crossing would be 273 instead of 268. And again, on top of that, we're gonna keep tweaking and tweaking the trade with multiple rolls until we get to July 16. So all looking good. Yesterday we did rolls using June 18, and therefore there is nothing to be done until next week when we met again, and we'll talk more about that. And the last one, actually not the last one, but the next one is AMD, which that one I'm just gonna skip it because yesterday we said that there is nothing to roll. The Greeks were distorted all over the place with AMD, because implied volatility has not rised yet at all, and therefore there is no reason to do any roll. We are very likely going to just leave it alone all the way to June 18 and let those options expire. In any case, we will review and reconfirm that next week on Wednesday when we meet again, okay? Because this one is using June 18 expiration. Okay, and the last trade for us to review is the one with Lily, which is doing quite well, I believe. Lily here is making at the moment $578.5 per contract. Remember that yesterday we converted our trade into a spread. So now we have the 230 call and the short 240 call. So we just have a regular vertical spread with July 16 expiration. And this is a trade where we concluded yesterday that, and you can see how today it pushed higher another 3% up. Okay, so it's behaving and performing amazingly well. So we are, at this level of profitability so far. And of course, the more it goes, the more we're gonna make, and ideally we will end up above 240. So we're gonna collect our maximum profit of 1,223. So we will have to see that happen. It hasn't happened yet. We have until July 16 to see that happen, and therefore we will be commenting on this trade for a while. Okay, but so far is looking good. And remember, this trade cannot lose money anymore. Even if the stock goes bankrupt, you would still profit net $223. Okay, so with all of this said, this takes care of the review. I try to do this as fast as possible since yesterday we spent a lot of time reviewing the trades because there was a lot of information to discuss, a lot of comments to add, and actions to be taken when it comes to trade management. We did all of that yesterday, and therefore today the idea will be to focus on new opportunities, okay, and evaluate if they're going to be executed or not. So I have run the non-directional, let me see, question from Siderman, still not filled on selling the 175 put. Okay, got you, Siderman. No rush, remember, no rush. The fact that you already sold the 240 call is already putting you at a great advantage. So now just waiting, okay, to close those puts. Of course, the further away the stock goes, which is now today further than yesterday by 3%, in one hand, theoretically, the less the value of those puts, and therefore the better your exit price. But at the same time, because you are so far away from those strikes, the liquidity is very bad at this moment in time, and therefore you're having a difficult time to get the fill, isn't it? That's what's happening. So just just be patient there. Remember, those options are really using extremely little of your margin, so it's not a big deal. And if that stock starts going lower, while they may gain a bit of value, they will also gain some liquidity, and therefore you should have an easier time to exit. Okay, so just play patience, okay? And if any, we can certainly revisit what's going on, yesterday. What's going on next week when we meet again on Wednesday. And you receive $3 for the 240 call, which sounds very good. I guess you did it today, Siderman, or did you do it yesterday? Because I think that yesterday I got 195, so if you got 300, that's pretty good. Okay, I guess you did. You probably did it today, I would guess. Anyway, cool, everybody. So hey, before I start with putting trades together, everybody, please give me a quick okay, a quick confirmation that all is good. And when I say everybody, I mean everybody. So you guys watching this on Facebook, on YouTube, as well, please give me a little bit of feedback. You tend to be so shy in the public spaces, which I understand is public. It's probably a bit more comfortable to interact in the private room, isn't it? I get that, but at the same time, if you don't give me feedback, it's difficult for me to help you better. So just please go ahead and let me know how is it going with a quick okay, no okay, all good, not good at all, things like that. Leland, how are you, my friend? Very nice to see you. We missed you yesterday, unless you were there and you were silent. But we missed you yesterday, just for you to know. So don't be silent. Yes, the Lily trade is really working fine. Yeah, very, very fine. Okay. And remember, guys, while this trade is working amazingly well, we should not expect now every single trade to be like that. Okay. There will be times where the stocks move higher you know, at that pace, you know, up, down, up, down, up, down, up, down. This type of move like that, this is not something that happens that often, okay? Even though the little all-time high trick, if you wish, it's certainly you know, a great way to position yourself to go long and take advantage of that initial push, remove the risk of the trade, and do the tweaks that we have done. Okay, so nice. Making some money with Lily, wonderful, Lilan. Very nice, very nice. You were there. Good, perfect. Glad to hear. So anyway, so let's go for it. Okay, we're gonna start. I'm looking at the non-directional scanner. The way I've been scanning today, especially because before the market opened, volatility was higher. The VIX was actually higher than yesterday. So I was scanning for options which are expensive, meaning we're gonna do iron condors. That's how we're gonna start. And right now the VIX is not higher, actually, it went down, but there is no green UFO. It's all red UFO. So I would anticipate the VIX to continue falling. And therefore it makes sense to me to think of strategies where we make money when volatility falls, especially given the fact that in the portfolio I got 2 iron condors which are negative vega, I got 2 double calendars which are positive vega, and in that sense, you know, it doesn't matter to me if I'm gonna add iron condors or double calendars, because, you know, my portfolio has no exposure to vega at the moment, or the exposure is limited, right? So because the VIX is more likely to fall than going up, based on what I just said, I certainly prefer to start with iron condors, even though it would not matter if you were to start with double calendars, okay? So anyway, I sorted all those stocks that I got in the scan. The first one on the list is McDonald's. So let's take a look at McDonald's, and we will start first with the earnings date, which is July 27. This indeed allows us to plan trades you know, in many different ways. But what's the issue with McDonald's? It's basically making all times high. What happens? We got no UFOs. We got 57% probability, which is beautiful, huge institutional interest. But you know, what about pre-post market? That's 43%. That's not good enough, and there are no UFOs, red-colored UFOs either. So then we're gonna have to move to Johnson & Johnson, which is the next one in line, and see what is it that we can do. So 1 second here, let's see. So what do we have? So we have 42% with that stock if I use pre and post market. If we look at regular session, we have 53%, and I do have UFOs above and below. Is that stock making all times high? Yes, but we do have 2 UFOs. So we can give it a try. We have 2 red UFOs above and multiple green UFOs below. Earnings are on 7/21. And therefore, we got multiple expiration dates for us to choose from to put together a trade with Johnson & Johnson. Okay. So, now of course, because those UFOs, we only got 2 red UFOs and they are not that far. So I'm going to start with June 18, and hopefully June 18 would be good enough to give us a yes. So I'm going to right click, analyze and sell an iron condor. When doing so, and selecting +1 standard deviation last and -1 standard deviation. When I do that, probabilities suggest, before I get to adjust strikes, 170.5 and 163 are the numbers. So 170.5 okay, and I think it was 63. Okay, 163 were the numbers, isn't it? 163, 170.5. Yes. So you can see that if that's the setup, okay, and I was to focus on the top of the range being that upper UFO, and I was to focus on the bottom part of the range to be that bottom UFO. So in both cases, those UFOs are beyond the dotted line. And therefore the setup you know, works. If I calculate the vertical distance from here to here, okay, and I project it below, so definitely that 162 seemed to be just a little too close. So maybe if I was to move to the next one, I'm just giving myself just a little bit extra wiggle room. I'm not going to be exactly centered, but this seems to be a better selection where you end up slightly more centered than if I was to use the 162 UFO. So I would be using the 160. Okay. So now, of course, 172.73 probably provide us with a strike, which is 172.5. Let's take a look. And the real question is how much we get paid for that. So oh yeah, disappointing. 172.5 only pays 12 cents. So that's it. Forget about it. We don't get paid enough. And if I move to the 25 of June, even there, I may not get paid enough. Okay, this is surprisingly low. I am shocked, guys, okay? So 14% implied volatility on a company that manufactures one of the vaccines that is being used through the pandemic while the world is still going through the pandemic. And, you know, it's like there is no perceived risk at all. You know, there is less perceived risk on that than the S&P that has volatility of close to 17%. So it's, I don't get it. I am quite shocked. In any case, you know, you may be wondering how come that stock has been picked with such low volatility. Well, it's because the way this is calculated, if you look at the filter, so if I zoom in here, we have this implied volatility stochastics, okay, which is the calculation that is looking for the top 50, okay, and guess what? It seems that, you know, that those options prices for that particular stock, Johnson & Johnson, have been behaving probably in an overbought territory, which doesn't mean it's super expensive, but it's been behaving in the high part of the prices for a while, and therefore it's being picked as a top price option while implied volatility is relatively low. Okay. So yeah, this is a little bit of a downside of using the scanner the way I have it set up, which is, you know, some of the limitations that, you know, we would find on TradeStation. Okay, but in any case, I said that before. It will still take a little bit longer because we are still, you know, in final stages completing certain things that we need to complete. But I cannot wait, guys, to soon show you some additional tools that we're going to be using in the sessions soon to do a much more efficient options analysis, you know, much faster, less tedious, and more even more accurate. Okay, I'm not saying that what we're doing is not good, because, you know, as you can see, you know, it's working quite well, isn't it? But there are certain tweaks that we can do to make it better. Okay, so I look forward to share some of those things soon. Anyway, so Nike has an expiration date of 6/24. 6/24 is right there. Okay, so we can only use 6/18. Now with Nike, we got multiple UFOs above and below. There are plenty. So as long as there is volatility, we should be able to come up with a valid setup for the trade. So, but remember, we can only use June 18, okay? We cannot go beyond that. So let's take a look at what happens if we do an iron condor with June 18. If we do an iron condor with June 18, that's bringing the prices up to 134.84 and 126 something. So 126, 135. Okay, so something like this. Okay, this is what is supposed to happen. Nike is supposed to stay between those two values. Let me delete this box. So we'll be looking at June 18 expiration, and so let me delete this text. It does not apply. And then we are looking at 2 UFOs above, 2 UFOs below, but also I want to take a look at pre and post market for Nike. It's 48%, so that's good. And we got 1, 2, and therefore this will be number 3. Okay, and then we got 1, 2, and this would be number 2. Okay, so we already got 2 UFOs above and below. So if I move now to regular session, and I look forward to, okay, so my second UFO is lining up here. Okay, I can also use this one actually. Okay, I can also use this one. And if I use this one, and I measure the distance from here to here, okay, and I project it below. So this will bring me down to this UFO that really looks like a very neat setup where I'm, you know, pretty well centered. Okay, now the question is, I'm going to be selling the 138 call for this iron condor. So how much I get paid for the 138 call? This is the key question that will help us to either approve or discard the trade. And in this case, we're going to discard it because it's only 10 cents. And I could not use the next expiration date because earnings are happening before the 25 of June. Okay, so we're going to have to pass and go for the next one, which is Starbucks. So waiting for Starbucks to load. Earnings on 727, that's good. Plenty of UFOs above and below, that is good too. 52%, that is more than 48 is good. What about pre and post market? That's 41, so that's not good. So we ignore pre and post. We work on regular session with a 50%. Yeah, and we can use multiple expiration dates all the way to 727. So I guess we're gonna have more flexibility here to have a trade work. I'm not sure if it will work or not, but it seems that at least we're gonna have more flexibility and therefore a greater potential to approve the trade. Okay, even though we need to review everything and not to get overconfident here. Okay, so what do we have? 115 to 108.5, something like that. So 108.5 is kind of like here. Okay, and the other price I said is what? 115, yes. So somewhere here. Okay, so if I was to go a few UFOs above and below, so if I point at this UFO, this is 3 UFOs above, okay, which is 2 or more. And if I point at this one, so this is 3 UFOs below as well. So we got 3 red, 3 green, and you know, price is relatively centered, so we are good. So the question is how much I get paid for the 116 if I use June 18 expiration. So, and that is 13 cents, which is not enough. But in this case, I'm not too concerned. And I need to clear my throat, guys. Sorry for a minute. Sorry for that, guys. I am back with you. So I'm not too concerned in this case because it's not like that's it. I didn't have enough premium and I'm done. No, in this case, I don't have enough premium, but I can use the next one, which is 35, and that's good enough. Okay, now the question is, if I use, instead of June 18, I use June 25, so now of course my statistical range expands to 116 and 107. So where is that? Okay, so 116 is actually there. Okay, so you know, we are actually good. Okay, and 107, or was it 107? Where was it? 107.54 is more or less here. So actually it works. Okay, it actually works. Okay, it's very, very narrow, if you wish. It's very, you know, it's a bit daring. Okay, but it works. Okay, so we are gonna go ahead and do that. So let's plan on this trade with 116, which pays us 35 cents, okay, and 107, which pays us 36 cents. So in both cases, we are receiving enough premium. Remember, our minimum is 35, and we get that, okay? So therefore, we're gonna do above 107, 117, 116, and below, we're gonna do 106, 107. Let me review that on the chart to make sure I said it right. Yeah, 107 is below, 116 is above, yes. So therefore, my friends, we have a trade which is approved. You will see. So get ready to practice this with me if you feel like it. So we're going to be buying the 117 above, selling the 116 before that, and those are going to be calls. We are using June 25 expiration date. And below, we're going to sell the 107 put and buy the 106 put below. Okay, so this is the trade plan. Okay, so this is how the trade is going to be constructed. Okay, So again, why did I say it's approved? Well, the reason why I say it's approved is number one, because the 116 call pays 35 or more, the 107 put pays 35 or more. We saw that in the option chain, so that's good. And the second reason why I said so is because the distance between strikes, which we call the raw risk, is $1, right? And the rule that we use is that we want to collect at least 15% of that, which is 15 cents. And how much is this trade paying if you get the midpoint? 22, which is more than 15. Okay, so in that sense, the trade is approved. Okay, but I want to explore a bit more. Okay, because if I make 20 cents, it shows now. Okay, right? So if I make 20 cents, okay, out of a $1 risk, okay, so that's 20% of one, isn't it? Now, what if I expand the wings of the condor to 105 below and 118 above? So if I expand them, okay, so now, sorry, not here, here. So if I expand it now, notice that it says that I'm going to collect 34, okay, and now my risk is 2. So percentage-wise, this is 17%, which is worse than 20%. So in other words, it's a better deal to do 107, 106, 116, 117 instead of expanding the wings further out. It's a better deal. In any case, sometimes it has to do with liquidity in certain strikes. So I'm going to try one more to see if I get a worse number, which should be the case, but I just want to reconfirm that. So if I do 119 and 104, so now what I get is 42 cents, which is the midpoint, and now the risk is 3. So 42 divided by 3, now it's 14%, which is worse than 17%, which is worse than 20. So in other words, the trade is approved to be executed utilizing 107, 106 and 116, 117 on the call side. You should be able to collect 20 cents. I would say let's go for 20. Okay, be patient on getting filled. And if you don't get filled, you can even review it tomorrow. But don't rush it, okay? Because again, in this case, to make a decent profit, you may need to use multiple contracts, because let's face it, if you do one contract only, you're gonna make $20 in a week, in 2 weeks. So it's not like this trade is gonna make you, rich, right? I mean, we are never shooting to get rich in one trade, but you get my point, right? Just a little bit of, not so good humor, right? But in a case like this, you're going to have to use multiple contracts, and therefore the commissions are going to be heavy on that. So just make sure that you get the best price you can. Okay, I would even start and try, 25, 24, and let's see how much I get during the day. If I can get more than 20 at some point during the day, that would be ideal. Okay. So let's be picky. Okay, that's my point. Okay, so let me put the trade in. So we are entering a new trade on Nike. Oh, it's not Nike, Starbucks. I'm typing Nike and I'm like, no, it was not Nike. Nike was the prior trade. This is Starbucks. Sometimes it's good to fully detach yourself from whatever it is that you trade. And sometimes, to be honest, it could lead to mistakes if you totally detach yourself. When I trade, I really don't care if it's futures or Forex or an option or it's a stock or what it is. And I guess that there is a good side of that, but then there is the danger side that you may type the wrong symbol. Okay, so anyway, so I'm going to sell an iron condor using Jun-10. Okay, let me put this together, and I see Christian a question. I'm back to you in a minute. So we said on the call side, we're going to do 117 and 116. That's what we said. And on the put side, we said we were going to do 106 and 107. And that shows a credit, the midpoint, to be 21 cents, okay? So I'm gonna, again, because I want to get filled, because, I do this for I don't care to optimize anything here. I just want to have the trades running so I can manage them, so you can learn from that. So I'm just going to go for, a very, 15 cents, which is our minimum, isn't it? I'm going to enter this trade, and we'll see how much I get, okay? And that's what I'm gonna simulate. So let me review these. 117, 116, 107, 106, 25 June. Yes, 25 June. We said 117, 116, 107, 106. Yes, it's all correct. So I'm just gonna place the order, and then I will then go ahead and look at the questions and give you a bit more time for you. I got filled at 19 cents. Okay, so I got 19. That's what I got. Okay, so let me document this. I got 19. Here we go. Done. So we have it in. Okay, now your question, would you do 2 or 3 contracts? Christian, that depends on your risk rules. Okay, so notice that this trade has a risk of 100, but you got paid, I got paid 19 cents. So in other words, the most I will lose is 100 minus 19, which is what I collected. So the risk per contract is $81. Okay, that's the risk per contract, $81. So let's say you tell me, knowing that the risk is $81, let's say you tell me, look, Jose, my risk profile suggests that I should risk $200 maximum per trade. So 200 divided by 81 tells you that you can use 2 contracts. Let's say you tell me, Jose, I want to risk $500 per trade. You know each contract is going to risk you 81, so then you can do 6 contracts. That's what you would do. And when I say 2 contracts, 6 contracts, means that let's say you do 2, then everything is 2. Okay, everything gets double. So basically it's 8 options contracts total, because it's, you know, it's 4 contracts times 2. You know, so keep that in mind. Okay, that's why I said that these end up, you know, being a significant amount of commissions. Okay, this is not the best trade to make a lot of money with, but it's a valid trade, and also it's a great trade for you to practice, especially if you are in learning stages. This trade has $81 of risk. That one is very contained, and therefore can be maybe a good one to practice. Okay, the risk with 3 would be 3 times 81. Okay, so 81 times 3, which is 243. Okay, cool. So going back to TradeStation, we are just gonna go ahead and I'm gonna add a row here to add Starbucks, okay, as an iron condor. And we will actually, you know, just to keep the same nomenclature I always do, I guess it would be nice if I was to draw a vertical line where the price is now. I was to draw a vertical line pointing at June 25 at 4 p.m. And then we were to draw a beautiful purple box, which is the place where we want the stock to stay from now until June 25. Okay, that's it. So we have it. Good. Okay, so we have trade number 1. So this is the time where, for you guys watching us from the public streams, we're going to say goodbye now. Hopefully everything went well in the session today. We will see you next time, my friends. Thank you for joining me very much. Thank you for joining us. Very good. And so we're going to continue now. We have a couple more symbols in the same filter with non-directional trades. So I'm going to go take a look at